and welcome to the GFG Resources Live Summit, hosted by Six. I'm pleased to introduce the speaker for today, Brian Skanderbeg, President and CEO. Brian will take us through a company presentation, and after that, we will be accepting questions. As a reminder, you can submit your questions in the chat at any point during the presentation. If you'd like to contact the GFG Resources team, feel free to fill out the survey, which will be linked in the chat. As always, the summit is being recorded and will be available on six.com to watch afterwards. Without further ado, I'd like to hand things over to you, Brian, so that we can get started.
Thanks very much, Max, and thanks everybody for joining today. My goal today is to go through what GFG has achieved in Timmins in the last 24 months and really focus on the last several drill programs where we've had great success in demonstrating the growth at Montclerg and the potential of the portfolio. GFG, for those who don't know, going for gold or gift from God, we're a Timmins-based exploration company, Timmins-focused exploration company, and a strong portfolio of highly prospective district-scale assets, both in Wyoming and up in Timmins. Just a cautionary statement here. I'm a geologist, I'm an explorationist, and I think for everybody in this sector, we're optimists. I will make forward-looking statements, so please refer to the cautionary language statement enclosed. When we think about GFG, we're a great team. We've had strong success before. Our vision for this company was really to put district scale assets together in great positions, in great land positions in districts like Timmins. These belts have continued to yield world-class deposits through the cycles and have immense infrastructure. And where we focus our strategy is in belts like Timmins, putting together regional scale land positions and being aggressive and disruptive with respect to our exploration strategies. We maximize the capital in the ground, and ultimately we operate to a very high standard. Before I go into the technical aspects of the last several drill programs and where we see the assets going, I'll touch base on our share issuance. We're about 200 million shares out. We'd be around a 25 to 30 million market cap company. We have great cash balance in the sense that about 4 to 5 million in bank. This was largely related to a financing completed back in mid to late Q1, and it sets us up well for a balance sheet position through 2023. One of the things I'm most proud of is the support we've had and the shareholder base that we have, and I think it's a highly respectable base of very technical, competent individuals and companies and investment funds. Alamos Gold will own 9.9% of us. Has been a strong supporter, and we thank them very much to their support over the last number of years. 1875 is the Lundin family office out in Geneva, US Global and Delbrook, Pathfinder, Gold 2000. These are all very seasoned resource-based investment funds and strong holders of GFG. When you think of the technical team and the management team, I'll start with the board of directors. This group has been responsible for the discovery, development, and production for many companies, and very strong transactional orientation. Patrick Downey, Brian Booth, been involved in lots of sale transactions within the gold mining space. Arnold Klassen used to be the Kirkland Lake audit chair, so very formidable financial acumen. Lisa Riley, great Latin America focused, banking focused, and a very strong candidate on board. When you think about the management team, this is a group that's had success before, and our most recent addition, Anders Carlson, as the VP Exploration, is a gentleman that we worked before at Claude Resources. And in reality, Rick, myself, Mark, and Anders all were very strong contributors to the success of Claude back in 2016 when we sold it for about $350 million. So good, strong technical team, great board, good shareholder base. And you see the upper right, I'm going to talk a little more about the share performance and some of the drivers in a subsequent slide. When I think about exploration, I think about the longer term of the space and where the trends are and where the opportunity is. This graph's a little dated, but it still serves the purpose up to 2020. If you extended it for another 2 years, it's not going to look any different. But ultimately, what you see is the amount of gold found versus how many dollars have been spent in the industry. And if you drew a line on that, you generally get a trend that's showing a modest decline. And ultimately, what this means is that relevant discoveries are becoming harder, and they are worth more, I would say. But on a per ounce discovery cost, it's certainly increasing. what I take that to mean is that relevant discoveries will be more and more valuable. And it is even more important as an investor to focus on the right team doing the right projects at the right time of the cycle, and truly investing their capital appropriately. So when I look at the bottom here, what is GFG doing differently to solve this challenge we place in the sector? I think we have to look at the cycle timing and understand where we are and how we impart our strategy during that. So our consolidation phase in Timmins has been ongoing for 4 or 5 years right now. I think the entry point has been appropriate. We put these big blocks together. We ultimately are applying new technologies and looking deeper and looking undercover. And I think those are the methodologies that are going to be successful in going forward. And ultimately, when you're thinking about who's going to be successful, you want a team that's done it before. So this team has done it before, and I believe this is the right combination of aspects to look at in the junior mining gold space. When we think about Timmins, this is the land positions controlled by GFG. It's about 800 square kilometers in those 3 blocks, Gold Arm, Pan, and Doré. That landscape is about 200 kilometers across, and amongst that is 150 million ounces of historic production, current reserves, and resources. So it is one of the most well-endowed pieces of crust in the earth, and that's why GFG has gone here to be the main focal point of our spend and our exploration philosophy. So you start with an area that has a lot of gold in the ground. Good, strong history of discovery. Not only has Timmins produced about 70 million ounces, but when we look at the landscape and the discoveries out here, things like IAMGOLD, Côté, and Borden off to the west, these are deposits that have been found in the last cycle. Pan American's asset, Timmins West, a very large gold system found west and outbound of the main Timmins camp. So a good history of recent discovery shows the endowment that's still preserved in this belt. The other thing I look at, and I think is very key for GFG, is the abundance of infrastructure here and readily available alternative production paths. And by that, I mean, we've got Newmont, we've got Pan American, we've got IAMGOLD, you've got McEwen, Agnico Eagle. These are all very formidable development and mining companies that control infrastructure in this camp. A 36,000 ton a day mill at Côté will very much change the local landscape around there. Things like the Dome mill in Timmins, 13,000 tons a day, and the trucking feed for 180 kilometers from Borden into Timmins reflects the need for feed. So this is the second piece of the strategy. The infrastructure's here, and there's a need for feed moving forward, and there's more gold to be found. This is really why we're focusing in the area. The bulk of my presentation today, I'm going to focus on Gold Arm, which is out to the east of Timmins. It is our most advanced asset. It's where we've allocated the bulk of our capital over the last 24 months. And it's where we've seen most of the economic results published by GFG. So zooming in a little more at this eastern Timmins landscape, a couple big points to bring about to you. GFG controls the area in pink up on the top, the Gold Arm property. From a land position perspective, it's about 30 kilometers end to end. It sits along the Porcupine Duster and the Pipestone breaks going off to the east. Just from a control and neighbor perspective, Newmont controls the area in Yellowback in Timmins and Pan American in blue. Other pieces of infrastructure also controlled by some of the majors of the Agnico in blue. Also has good production infrastructure just off the map to the east. Some of the big deposits, and I think this area east of Timmins is very, very prospective, and you're going to see more and more things happening here. Fen Gib is immediately to the east of us. Moneta sits just past that. Those are both bulk tonnage systems, and if you group them together, there's a global endowment building in that area that is sort of 10 to 15 million ounces, and I believe that that will warrant relevant infrastructure in the future to support that production base. When you think about GFG's land position along this Pipestone break, and this would be the main Pipestone, good deposits along this break, relevant sizes at Bradshaw and at Clavos to the west of us. Croesus and Fen Gib, these are ones that sit immediately east along strike from us, both formidable deposits or historic producers. And with GFG, we focused on putting a very relevant land position together that includes the Montclerg block, which is just in here at the west side, and the Gold Arm block up to the northeast. So big land position, lots of gold in here, lots of infrastructure, and a highway going right across it. So when I think about that block to the west of us, this Montclerg block, and this is where we started, we saw a system that was about 1 kilometer in strike length. Most of it had been drilled back in the 40s and 60s, 120 holes plus or minus in it. And what we saw was a really interesting system that had found early in the district history back in the 30s and 40s. And it was found outcropping on this creek bed, and then it extended out under till cover going off to the east and west from that area. Early stage drilling was focused on just high grade deposit model and really looked at 50, 100, 150 meters depth, and really stopped in the 60s. And in terms of modern exploration and drilling and modeling, not a lot had been looked at. We acquired this property from a company called IEP, which is private. They drilled a few holes, and they demonstrated back in the 2000s that there was potential for bulk tonnage here as well. And I'm going to show you a cross section through that red line that I just drew, which is the central part of the Montclerg deposit. And in the south part of it is the Canamax deposit. Those are two main gold systems, and this is about a 10-kilometer map. So there's actually quite a bit of room on this map, never mind the 30 kilometers that we control in entirety. So here's the geological cross-section through looking to the east, and it's meant to demonstrate what we started with and what we saw in the system. So if I looked at the old timers, they would have drilled in a hole like this or a hole like this, and they would have just sampled those individual red assays. And that's all they would have sampled. And so when we looked through the database, we saw things like 10 grams over 2 meters and 15 grams over 1 meter and individual sampled vein intervals. Now, when it was sampled in entirety, we saw things like 3/4 of a gram over 125 meters. We saw things at 40, 30, 40, 50 meters wide. So we saw this bulk tonnage aspect that really hadn't been realized by the historic explorers in the 30s and 50s. So we saw a nice system at Montclerg. We saw a couple holes at depth that were still very interesting. And we saw this other corridor called Canamax, which has some Temiskaming intrusions in it, has some high-grade gold vein systems near surface, and broad anomalous. And by that, I just put a circle around things that are 100 ppb and, just show you the character of the system. Those are really good signs. So we liked what we saw here when we first came into this system, and this is what we acquired back 24 months ago. When we think about what we've achieved now, and the deck here shows about a 90% hit rate since acquisition. So we've had an extremely high return rate of economic intercepts. By that, I'm talking greater than 15, 20, 40, 50, 80, 100 gram meter products. So these things are intercepts that we could see hitting mill at certain times. Now, we've also shown on this map the share performance versus the distribution of news releases. And if you look through these individually, we acquired this probably back in April of 2021. Very quickly, we stepped up an aggressive program. And in the first program, we drilled the best intercept ever hit, 5 grams over 26 meters. And that was definitely rewarded, pushing us back up into the market, back into sort of the 20, 25 cent range. And this would have been Q1 2022, which was actually a reasonable time in the gold market. We kept very steady for news flow all through last year. And I think we published some great results, things that are like 130 gram meter product intercepts, bulk tonnage. We published things like 10 grams over 16 meters, 8 over 8. These are 40 to 80 gram meter product high grade intercepts, and we published them throughout all of last year. Now, as an investor, you would have seen the challenge that was last year, generally in the sector. I think what you want to do is find teams that have continued to publish good results through this down cycle, through the low, and continued to be advancing the project and remain well financed, which we have. Coming into 2022, later last year, we published things like 10 over 16, and that did bring us back up off this base, and we've traded generally flat since then. Just recently, we put our last press release back here in June, and it was 10 grams over 8 meters. Now, anybody that looks at drill intercepts knows that that's an economic intercept. Most underground mines run at a 3-4 gram cutoff and a minimum mining width, which would be 2 to 4 meters wide. So things like 10 over 8 are very solid intercepts. So I think what we've demonstrated here is the ability to continue to hit economic intercepts, prove continuity, and generate relevant news flow over the last 24 months. To me, this is a very good sign. Now, when you look at the details of what we've published, GFG has drilled 57 holes since we acquired this back in 2021, and a very strong hit rate of high grade and bulk tonnage intercepts. exposing a system and delineating it over about a kilometer. And if I looked at that distance just from here to here, that's about a kilometer. We break it into panels called MC East, MC Central, and MC West. There's a creek through here, and there's a large fault through here and dike system that segregates the deposit. So that's why we think of it like that. Most of our very strong drill results have been in MC Central. We did feel that we could go to the east and have good success. And if you looked at these drill results, I think we've proven down to 200 meters in MC Central, there's very good continuity. And then we have depth potential, which can still be added onto it. A very intense system, good strong veining, broad intercepts at a shallow depth, and still the ability to grow it moving off to the east. Then we look at some cross sections through here, and I think, you know, a couple points I want to bring to the to your attention on this is, yeah, there's some till cover here, and this is kind of like 10 to 30 meters of till. And underneath that, we see a couple zones of mineralization developed and a couple different geological settings. In the yellow unit, which is felsic volcanic stratigraphy, we see generally broader sheeted vein arrays. And these are anywhere from 20, 30, 50, and even 100 meters in thickness, sort of half gram up to a gram and a half style mineralization, shallow depth bulk tonnage. That's where you're seeing the broad intercepts of sort of that gram to gram and a half. Now, we also have this other unit called, we call it a ferrobasalt. Essentially, this is a really good sulfidizing rock unit. And what that means is you precipitate a lot of gold and it's a good host rock. So we see this system developed in the footwall, very high grades. So things like 10/16 and the 5/25 and another 50 gram meter product up dip outline the structural controls of this high grade footwall environment. And the 25 and 15 meter wide intercepts are generally at intersections between that bulk tonnage and that higher grade footwall shear. So we're understanding the detail of the structural controls in here. I like the ability to be able to hit this on dip, to look at it on strike and start modeling it. And we're definitely building our understanding. Now, as we go to depth, we also see things hanging out down here. This is 8 grams over 5 meters. We don't know, it might link to this, it might come back up to contact here. The point is we still see very good depth potential for more systems to develop down. And this isn't that deep, this is down still at about 300 meters vertical, where there's very limited drilling. So that was 2021 and 2022. Coming into 2023, we allocated a $3 million budget into Timmins. And we executed off the start of this year a program that took twofold. A, we wanted to focus in MC Central and MC East directly. And I would say that that's kind of these type of holes in this environment. Infill, depth continuity, and that was about half the program. The second half of the program took much bolder step outs, and those bolder step outs were even up to a kilometer and a half going off to the east. And within those, we have published some results and we have further assays pending. So the press release that GFG put out here a couple of weeks ago showed a great intercept, 10 grams over 8 meters in the upper footwall zone, 60 meters from surface. So we are chasing this zone back up even closer to surface in the MC Central panel. Very encouraging results, even things like 4/4, which had a high grade hit into it. Some good hits in here in the MC Central area. Also in the release, we did start to show some step out holes, and I would flag this intercept out here, which ultimately was designed to test the continuity of this felsic rock going off to the east. Stepped out about another 300 or 400 meters. We saw up to singular assays up to 5 and 6 grams. We saw some intercepts that were 3, 4, 5 meters at a couple grams. So the system still continued there. And we were quite enthused by it. Now, that's one corridor. The footwall corridor would be down in this environment. We also stepped to the east there, 2 grams over 11 meters, 6 and 7 grams, 5 gram hits. So as a step out hole, if we're going out there 300 meters, we're just looking to see if the system's working. Like the signs of it, we like the alteration, we like the characteristics, and we still have further assays pending along strike to the east. And think back to that regional map now where we had 10 kilometers, 20 kilometers. We have a lot of strike continuity. One of the things I like most about this area going to the east is this rock unit, ferrobasalt ferrobasalt. It's thickening going in that direction. That is our preferential rock unit. And there's two rock units here that host gold, one of those being the felsic volcanic units and one of those being this ferrobasalt. Both of those have immense strike continuity undercover and an area that was completely untested historically. So we continue to build the picture going to the east and grow the confidence in the area directly of the MC Central panel. That is the most important thing that we published here in this last press release, was that we can continue to hit strong drill results in MC Central and show hits. And we show the step out of the system going up to 1 kilometer to the east for the step out holes still had really interesting numbers in them, and the system's still working. So we have lots more work going to the east, and we have assays pending on a number of holes there as well. So I've spoken about an environment here at Montclerg, which is about 1.5 kilometers. We have 30 kilometers here, and we're doing targeting work across the rest of the Gold Arm property. Anders and his team doing a lot of work on building the target pipeline and ranking that target pipeline to build the next phase of discoveries across Gold Arm. We took one step out into a target called Aljo last year, and it is an old mine area from the 30s that produced about 20,000 ounces, good high-grade veins at surface. I would flag things like 300 grams at surface. These are high-grade vein systems at surface. Limited underground infrastructure that was tied to some of this historic development. We put 3 holes in here, and in the end, I thought we saw some really encouraging results. Peak assays were up to 60 grams, multi-ounce material. And we saw some thickness to some of these things where you had sort of 3-4 grams over 4 or 5, 8, 10, and even up to 13 meters. This was 3 holes into our new regional target that still has lots of room to grow. So pretty excited about Aljo. Aljo and Montclerg are the only areas we've drill tested. Expect us to be back in the Aljo environment. Expect us to do more work directly in the Montclerg environment, and expect us to build the target pipeline across Gold Arm. So when we think about this landscape here of what GFG controls, we've been very active in the drill programs over the last 24 months. We've published continuously good, solid drill results. And we continue to work on the landslide, where there's probably some other pieces that we're working on, some of these little windows in it, direct strike continuity of some of the areas along strike, where I think there's probably still some work to be done from the land consolidation point of view. But in the end, when we think about this area east of Timmins, I think it's a very relevant area from an investment standpoint. There will be relevant infrastructure built out here. I believe going forward, it is the scale and type of deposits that are attractive to majors. Guys like Barrick, guys like Newmont, guys like Agnico want to see potential for 10 and 15 million ounce systems. And that's what you're seeing going out here to the east of Timmins. I believe this is a great place to make a new discovery. And I think GFG is really onto something at Montclerg and some of our other regional targets. So when we think about our objectives for this year, we're going to spend $3 million in Timmins. That money's in the bank. 10 to 12,000 meters of drilling, of which we've drilled about 3,500 meters already. Focusing at Montclerg on the MC Central and step outs to the east. I do think you're going to see us in the latter half of this year step out and do more greenfield testing as well. We are currently building the geological model that would constrain the area and help us understand what the scale of the system we're looking at. I don't think we're quite ready for a resource yet, but I do think we're building all the building blocks that drive into it, and ultimately we think we're onto a pretty large system here. And we're building that pipeline of targets underneath it. I haven't spoken today much about Penn and Doré. Those are the blocks east of Timmins. I still really love Penn. We have work being done directly adjacent to us by a mid-tier gold company that's drilling right up on the property boundary. Look, we're really excited about Penn too, and I think there's optionality there, and we're reviewing it in terms of what the right path is for GFG. For this year, our main focus of the dollars is into Montclerg and Gold Arm, though. So when we think about GFG, I've talked to you today about 2 district scale assets, largely just focusing on Montclerg, but also Penn and the greater Gold Arm block. This is a team that's found deposits before, built them, operated, and it's quite transaction oriented. Strong support to the mid-tiers and majors, and good shareholder base that allows us to continually finance this path. And ultimately, when you think about us, we're very efficient at putting dollars in the ground. It costs us about $1 million a year to run the company, do everything else, and all the other dollars are going in the ground. So that's a pretty strong capital allocation into what we think builds value for the company. In the end, we think we're one of the areas and one of the groups that can bring the next Timmins gold mine and deposit to discovery, and we're well funded with a great catalyst-rich period for 2023. So thank you very much, and I think I'm open to taking any questions.
Awesome, thanks for that. So the first question is, how do the gold grades compare to other projects or mines in Timmins?
Yeah, it's a good question. Timmins is not a high-grade camp by standards of the Abitibi. Average grades that are being produced right now are in sort of the 2.5 to 5 gram range. And I would be referencing things like Hoyle Pond, might be a little higher than that. Timmins West and Bell Creek, those would be in that 2 to 5 gram range. And if you think about the 70 million ounces of the production, most of that will be in the sort of 4 to 6 gram range. So when you're seeing us publish results that are 6, 8, 10 grams, those are definitely economic hits and mineable widths. And they compare favorably with what you see as production grades, even going off to the east. If you look at something like the Holt mine, that was a sort of 4.5 gram ore body, Black Fox and McEwen, that had some sort of similar grades. And then you go to this stage of deposits, which would be more bulk tonnage, and whether you're looking at things like Moneta, or you're thinking like a Fen Gib, which is Mayfair, or other deposits that would be more bulk tonnage like Cote. Those are all in this sort of, let's just say 0.8 to 1.2, 1.4 gram per ton range. And we are seeing some bulk tonnage widths and grades that consistent with that style of mineralization as well. So I think there's a very strong and favorable comparison to the intercepts we're seeing and how they benchmark to what are economic grades and thicknesses in the camp. Hello?
Oh, sorry about that. I was muted. East of Timmins seems to be very active, a very active area with groups like Moneta, Mayfair, Onyx, and McEwen. What do you envision happening to this part of the Timmins Gold District?
Yeah, no, I flagged it a couple of times in this presentation because I think it's something investors should really pay attention to. And it's like where you're seeing deposits, groups of companies achieving critical mass, and where you're seeing reasonable capital allocated and payback of that invested capital. And we might not think certain companies are trading at a valuation they deserve. We all have our pet peeves in our portfolio that haven't performed well. But big picture, think about a block of ground that might be 60 or 80 kilometers in strike length. And you're seeing in that area, which is, truckable distance to a central piece of infrastructure, total endowment reaching things like, I'm just summing it all and saying this, you can thumb suck it and say this is 15 million ounces out here. This is 20 million ounces out here. And that to me really changes and validates an investment that will attract a large scale company and support a piece of infrastructure. When you look at Cote is a 36,000 ton a day mill that will have a very strong production portfolio for decades to come. It's infrastructure like that I think you'll probably see down the line in this area east of Timmins. So I'm really excited, and I think many of our peers are doing a pretty solid job of building quality resources in the area east of Timmins, and ultimately we saw preserved endowment there, we saw potential for discovery, and we saw a good entry point, and that's why we put Gold Arm together. Was this trend that we were seeing, and we were in front of that. We were in front of that because we were here 2 years ago, but we could see it happening, and we found the right entry point, and we continue to work on the right strategic paths in this area east of Timmins, where I think there's a lot to be unlocked.
Awesome. And can you please elaborate on why you think the system continues more to the east?
The nuts and bolts of the geology that control this system are twofold. A little more complicated than that, but we got to have the right host rocks, and we want to see the right alteration in structures. And when we look at just the basics of the geology going off to the east, we see this highly prospective footwall ferrobasalt. This is a very good host rock for gold mineralization. We see this F3A rhyolite, which is a particular type of rhyolite, and both those rock units have high-grade gold associated with them, and they continue off undercover to the east. We see a good complexity of structure. We can see it in the mag data. We can see it in a structural model, and we see the presence of intrusions going off to the east. And those right style of intrusions, the ones that are anomalous in gold, that are really the hallmarks of good gold systems, when you have those right chemistry of intrusions present. So all those factors are present going off to the east, and the stratigraphy is thickening going off in that direction. And when you look out there, it's farmland, it's bush and swamp. There's no outcrops, and so it's preserved and very immature from an exploration point of view. So those are the rationale for us to head east and think about going east when we talk about prospectivity.
It's awesome. And bear with me, everyone. We have quite a number of questions here, so we're just getting through them here in no particular order. So how deep have you tested the system, and did it grade? And also, do you plan on drilling deeper holes?
Yeah, no, we would, the deepest would be around 350 meters. That was testing our lower footwall zone. So I alluded to some of these deeper intercepts being present in reasonable thicknesses, but still being quite broadly tested. So the deepest hole we would have would be about a 40 gram meter product. It had strong high grades in it, peak assay, and that was about 20 grams per ton. It had the right alteration. We were seeing, 10 to 15 millimeters of intense carbonate alteration with a core of high-grade gold to it. So we were seeing a good, robust system, both from an alteration and structure potential in the raised host rocks with high grade going to depth, and that was in our deepest hole. So I would expect us to continue to push on that deeper envelope, particularly in the MC Central panel. Yes.
Thanks. And we have Mark here saying, Mark Hilgart, one obvious concern for most shareholders, I believe, would be further dilution. Given that share count fully diluted is already close to 250 million shares, are we good to go for the rest of 2023 without any additional share issuance?
Balance sheet sits around $4 million. When you think, and we're moving in here in the end of each one, we don't budget a financing this year. I would love to see us move through 2023 and have some good catalysts and runway to keep the ball rolling here. We're always concerned about dilution. Ultimately, we're shareholders, and at 200 million shares out, it's a concern for all of us as executive and management. And our goal is to try to ensure that our valuation reflects the inherent value of what we're investing in. So I'm optimistic that we'll move through 2023 without further financing. What I would also like to see is find the appropriate path for Penn and Doré. There's value to be unlocked in those assets, never mind Rattlesnake Hills, which is a secondary asset in the US. So I think there's relevant strategic and value builds to be achieved from those. And I'm optimistic we can speak towards those in the coming quarters and H2 of this year. But right now, feel pretty comfortable with where the cash balance sheet sits.
Thanks. And are you planning on drilling the Aljo area this year?
Aljo sits at the top of our pipeline, right there with Montclerg and Montclerg East. We've had good results there. There's immediate drill-ready walk-up targets there that were not tested in that program. There's strike extensions of the systems we saw. There's a 300-gram grab sample out of a trench there that has historic kind of blast and exploration work done around it, but there's no drilling on that. So there's very high priority drill targets at Aljo, and I'd expect us to do some work out there later this year. When we think about the plan for the second half of this year, we will be drilling sort of 6,000-7,000 meters in H2 of this year. So that would be a kind of a 3-month program. If we conceptually had a sort of September, October, November, it'll be in that range where we would look at a pretty aggressive program in H2 of this year. And certainly one of the regional targets we would focus on would be Aljo. The Car area would be something else, and obviously Montclerg East and Montclerg itself.
Awesome. And you have Mark Hilgart here saying, hate to be a Debbie Downer, but another question for you regarding Wyoming operations and what is going on there, as news has been practically non-existent since the big announcement 2 years ago regarding your partner.
Yeah, Group 11 Technologies, and so those investors that may not know the details of it, they're an in situ gold mining private company based in the US, and the mindset was to partner with them on Rattlesnake Hills, fold in the asset, they'll bring the technology, and we'll see if we can develop some in situ mining technology. Now, winding us back about a year ago, we had the first press release, it was probably about 14 months ago now, maybe 15 months ago, that showed some really encouraging metallurgical results. In essence, being able to dissolve gold without using cyanide in an in situ setting. this could be huge, and we're very encouraged by it and our partners. That said, Group 11 hasn't been able really to finance themselves, and so we've moved along with Group 11. We're currently in some dialogue with them in terms of how to best advance this project. Is there a chance they don't continue with it? Yes. Have we formally been giving it back yet? No. So there's some dialogue that will be going on at Rattlesnake Hills. I would agree with you at this stage that we haven't seen a very positive or continuous news flow at Rattlesnake Hills, and I'm optimistic we can address that either in partnership with further work with Group 11 or with finding a different path for the asset. So at this stage, all I can say is really what's out in the market, and when we have something material to be disclosed on Group 11, we'll obviously release it.
Awesome. And can you speak about interest from other mining companies versus the investing community? Is there a disconnect from the geologists from the industry versus financial analysts and investors?
I think there is. In the sense that, there's a lot of interested peers of ours and mid-tiers and majors. So we have fabulous conversations with the biggest gold companies in the world about our philosophies in why we go where we do and how we're approaching our work and the nature of our results. And they're very enthusiastic and positive towards our exploration results. And we've got groups like Alamos behind us that, have been a great shareholder and good, strong relationship technically with the group at Alamos as well. So I think if I had to put a framework around and characterize the dialogue we have with the geologists at those companies or our peers, extremely positive. And then you flip it to the capital markets and you flip it to the shareholder side, where there is this relevant detachment between the sentiment that exists here within this junior space of underperforming juniors, despite peak gold. I mean, here we're having a great day for gold today, back up to 1975, and the market kind of sits here within the junior universe and yawns a little bit, and maybe some have moved up 3 or 5%, but generally many of our share price graphs look the same. So there is this very relevant attachment, I believe, between junior landscape financing and sentiment and the investor side, and the technical people that really, I think, drive this industry. And those would be the technical mindsets behind the juniors and behind the mid-tiers and seniors, where I feel very positive about what we've had for feedback about our work in Timmins in particular on that side of things.
Awesome. And I think this question might have been answered before, but how many meters will GFG drill in 2023?
Our budget is between 10 and 12,000 meters, and we drilled about 3,500 meters in H1 of this year. That was a program that went from March through into May, where it got a little wet, and we stopped it, obviously. Compiling, building our results, getting Anders on board now through the later part of H2 as a new VP exploration. He's got to get his feet underneath him and get to familiarity with it. The great thing is that he's a very quick study. He's very familiar with the asset already, having looked at it in part of his previous roles. And then we think of the H2 of this year. So if we can drill 6,000, 7,000 meters in the second half of this year, I think that would be our vision. And I think you'll see some very strong results. And if we can continue publishing good, strong exploration results that show economic intercepts at a shallow depth and grow the system, we will reach a point where we just get ourselves on more radar and we start moving the needle and we get credibility. And I do think there'll be a time frame where that detachment between junior sentiment and developer sentiment and major sentiment in terms of how the investors are feeling about the space will evolve. And what we've seen more recently is this tick down in gold price, and then now it's bouncing off the bottom, and we'll see if this one has legs now to break back through 2000. And I think that could very well be a catalyst, a very relevant catalyst for this entire space, is where you see investor sentiment change in the sort of medium term here and say, okay, we feel like interest rates have maybe peaked. We all know what the macro thesis of that is and the implications for gold. And that if we see that peak in interest rates, which we seem to be approaching, that has a very positive follow through and driver for the sector. So I'm optimistic that will be a big catalyst for the sector into the H2 of this year.
Awesome. And I think we have one last question here for you today. So are you still looking to acquire more leases?
as an exploration company, we always look at opportunities, and they come at all different scales. Some might be individual claim sales, and we added some claims, back a couple months ago by staking. Something came up; it was a small piece. We added it. We have other pieces that would be more modest sized, and it might be little blocks, and we might do a small deal with somebody that would consolidate something. And we are looking at those and have executed some of those in the not that recent past. And then there's more truly transformational types of paths where, can GFG pair with somebody where 1 and 1 makes 4? And it's very cliche, but size matters in this investment landscape. It matters for availability of capital, and it matters in terms of reaching a critical mass to be on the radar for the mid-tiers and majors. So does GFG entertain dialogue with candidates of its equal in size? For sure. Do we talk and look up cap and say, is there a rationale or a path that GFG might be able to put a more advanced resource into our portfolio, truly transform this company into a development stage asset, as opposed to an exploration and merging into a development stage asset? So yes, we have those dialogues as well. And I do think when you're in this type of the cycle, it's the opportune time to look at those. Many management companies will never transact unless they have to. And it's at this time of the cycle where you might find a real gem out there.
Awesome. We had... Brian, we lost you there for a second, I think.
Oh, sorry. Yeah, no, it's all right.
Okay. One more question here. How much extra capacity are the mills running around you have available? Are some of the mills running so mines do not have to do any reclamation?
Yeah, I mean, there's a couple examples. Holt Holloway is idle, held by Agnico Eagle. That's a 3,000 ton a day mill that's sitting there care and maintenance. McEwen Infrastructure, which is the closest piece of infrastructure, has relevant capacity and is on a kind of a to me, they're looking to grow the resource base before they have a formal restart. That's another very relevant piece of infrastructure. Moving into Timmins, you've got Dome, which is a 12,000 ton a day mill. Now that mill is currently near full, but they're trucking ore a long ways, and they're reliant on deposits that are relatively long in the tooth, or that may be on their downturn, like Hoyle Pond. The Pamour pit pushback, or the Pamour pit thesis of Newmont, is something that is in the life of mine profile. We'll see if it gets the go-ahead. If it does, it gives the Dome mill some feed. But whenever you look at these paths for infrastructure utilization, there's always this financial trade-off of what's the best path. So you might have ore running through there that's 2.5 grams from an underground mine into a 4,000 ton a day mill, and it makes sense for you. But if you had the opportunity to replace it with 6 gram ore from a ramp system underground and bring in an extra 80,000 ounces, then that would obviously be a better path. So it's quite variable, where some mills are completely underutilized and have excess capacity. Other ones, you have the opportunity probably to incrementally displace feed. And either of those scenarios could be in play for GFG.
Awesome. So I think that's all the questions that we have for today. So thank you, Brian, for taking us through the great presentation and the Q&A session. I also want to thank everyone for submitting all of these different and great questions. Today's recording will be available to watch on demand in the coming days, so feel free to look out for that. And you can also find more information on GFG resources by going to their website. And before we wrap up, Ryan, I'd like to pass things over to you for any closing remarks you'd like to make. And actually, we do have one more question here, if you want to field that before we wrap it up.
Sure. Always happy to answer the question.
Yeah, okay. So do you see any issues for being an exploration company versus what is currently going on in Mexico with shorter leases, et cetera, from a regulatory standpoint?
Well, I mean, the jurisdictional risk trade-off between the Abitibi and Mexico is an obvious one. And, the tenement security And the regulatory path in Mexico is obviously degraded, and there's no shortage of companies that you can look at over the last 6 and 12 months that would have gone through some of those challenges, and some of them have been hurt dearly. One of the things we really focus on and why we do business where we do is just that: security of tenure, security of ownership, ability to execute and operate, and not have somebody come back and say, well, your royalties are going to double. You haven't managed this tenement properly, so we're actually going to just take it away. We just don't run into those in areas like the Abitibi. They are mining friendly and mining focused. So it just flags to me the relevant jurisdictional trade-off between operating in definitely higher risk jurisdictions, and Mexico is one of those versus Canada. We're happy where we are. Not to say that there's not great opportunities in Mexico. There are. They're just not ones that we will focus on. And I'll certainly wrap it up from GFG's perspective. We thank you a lot for listening today. I'm really encouraged by the number of detailed questions that you guys have asked as investors, and take that as a very positive sign for your interest in the company. Please follow us. Look forward to the next batch of drill results and further guidance for H2 of this year. Mark LePage, if any of you know GFG, he's our VP Biz Dev and IR. Always happy to have a conversation with shareholders. Myself, Brian Skanderbeg, easily reachable by phone. And even if you want to sit and talk to Anders Carlson on the technical side, I'm sure he'd be happy to take some of your calls too and speak towards that. So we're a very approachable and engaged management team, happy to talk to shareholders. And we really do thank Six for putting on such a great platform and for us to distribute our story. Thank you very much, and we wish everybody the best.